For this session, our topic is your investment in equity securities under PFRS 9. So just a quick recap, under PFRS 9, we classify your investments as either fair value or amortized cost. Under fair value, we have FVTPL and FVTOCI. So we have your debt and we have your equity. Debt and your equity. So for debt, VTPL, VTOCI, and amortized cost applies. While for equity, VTPL and FVTOCI only applies. So why again? That your equity cannot be measured under amortized cost. It cannot be measured under amortized cost because equity does not have any contractual cash flow characteristics as to the collection of principal and interest, which is necessary to amortize a particular amount. Therefore, equity does not have amortized cost category. Therefore, in this particular session, we will focus ourselves into the measurement of your equity under FVTPL and FVTOCI. So let's look again as to the differences of FVTPL and FVTOCI. So when do we classify again an item as FVTPL and FVTOCI? We classify an item as FVTPL based on the business model, if ever it is for trading. FVTOCI, if ever it is for sale, or it can also be designated. It can also be designated. Take note, you can designate it, guys, whether it is FVTPL or FVTOCI. You can designate it whether it is FVTPL or FVTOCI. So you can also designate here. You can also designate in your FVTOCI. Most importantly, this is applicable for equity securities because uh, your equity securities are normally FVTPL. So you probably would only place it in your FVTOCI if ever you can designate it. Sir, why is your collection not included in your FVTOCI? Because in our debt investment before, we said to classify it as FVTOCI, we are to collect the contractual cash flows plus it is held for sale. But why now your FVTOCI is purely for sale? Because guys, we do not collect any contractual cash flows here. Unlike in your debt, there is a contractual cash flow characteristic, particularly the collection of your principal and interest. In your FVTOCI, we do not collect. We do not collect. Therefore, there's no collection criteria here as to the classification. Next, as to your recognition. When do we recognize again FVTPL and FVTOCI investments? Once you are a party to the instrument. Another difference, as your initial measurement, FVTPL, how do we measure it? Fair value only. FVTOCI, how do we measure it? Fair value plus transaction cost. Now, as to the changes in your fair value. In your changes in fair value, FVTPL, where do we place it? Profit or loss. FVTOCI, we place it in your other comprehensive income. Now, your subsequent measurement, both are subsequently measured at fair value. How about the treatment of transaction costs? Under FVTPL, what is the treatment of your transaction costs? It is expense. FVTOCI, it is capitalize. Okay. Impairment. Dito naman tayo sa impairment. So guys, if we look at it, the only main difference that we can see now is your FVTOCI and this one, impairment. So all those items that we learned under your debt investments are almost the same with your equity investments, except for these two items, for your TOCI and your impairment. Under FVTPL, do we impair? The answer is no, because it is already at fair value. Under your FVTOCI, equity security, do we impair? The answer is no, because this is already at fair value. Sir, question. Before FVTOCI debt, remember this one, FVTOCI debt can be impaired. Can be impaired. Okay, it can be impaired. But now, FVTOCI equity cannot be impaired. Bakit kaya? Pansinin nyo, dun sa classification natin, una pa lang sinabi ko, there's no collection. Hence, you cannot now impair the collection. Kasi nung una, sa debt natin, nag-i-impair tayo kasi may collection of contractual cash flows. Baka magbago yung collection natin. Dito, hindi na tayo mag-impair kasi nga, wala nang collection, wala ka nang i-impair. At saka, naka-measure na siya at fair value. So, sabi ko nga kanina, the differences of your equity and your debt lies purely on your FVTOCI. Here, as to the classification and as to your impairment, take note of this. Classification, because you can designate it now, because normally it is under FVTPL, but you can designate it in your OCI. Now, as to impairment, we cannot impair it. Why can we not impair it? We cannot impair it because there's no collection of contractual cash flows. Okay? We only impair if there is a collection of contractual cash flows. That's why nga, dun sa debt ninyo, we have FVTPL, FVTOCI, and amortized cost. Both FVTOCI and amortized cost may collection characteristics yan. Kaya yung dalawa, ang ginagawa natin is we impair them. We impair them. Here, we only have your FVTOCI, but no collection. Therefore, you do not need to impair it. You do not need to impair it. Okay? So, ito yung difference nila ng FVTPL and FVTOCI. That's why I want to emphasize PFRS 9 not based on the classifications. Kasi pag inuna natin yung classifications at hindi natin hinati yung debt securities at equity securities under FVTPL, malilito na kayo. Tandaan to FVTOCI equity securities are not impaired, but FVTOCI debt securities are impaired because of the collection item under your FVTOCI debt. Okay? So I hope we are clear. Sir, how about interest income? Do we record interest income now? No, because this is not debt. What we record here is your dividend income, but that will be a separate topic which will be discussed in your subsequent items on your equity securities for next meeting. Okay, now, since we are in your initial recognition, take note, under initial recognition, we measure it at fair value for FVTPL, and then fair value plus transaction costs for FVTOCI. Now, guys, what is your fair value again? Your purchase price. Your fair value is your purchase price. Guys, here, whatever is the purchase price, that is again the amount of your fair value. The transaction price is the fair value. Question now is, if ever your debt securities has a purchase in between interest dates, how about in your equity securities? Okay, di ba? Doon sa ating debt securities, sasabi natin nga, pwede tayong bumili in between interest dates. Pagka ganun, meron tayong accrued interest na nabili. How about here in your equity securities? Do we have in between interest dates? Actually, what we call here is a dividend on. Dividend on. So, di ba sabi natin kanina, ang income ng debt securities ay interest income. Ang income ng equity securities naman ay dividend income. Pero sabi ko nga kanina, dividend income will be discussed next topic natin yan. So, dito sa dividend on, ano naman to? So, kung meron tayong interest income or interest purchase in between interest dates, dito naman ang tawag natin dividend purchase because of dividend on. Sir, when can we say that there is a dividend on? There is a dividend on if ever there is a purchase of investment with dividend, and the dividend is in between date of declaration and date of record. Dividend on the purchase of investment with dividend in between date of declaration and date of record. So remember your three important dates. You have discussed this one in your AE 102. What are the three important dates for your dividends? You have your date of declaration, date of declaration. Next, we have your date of record, and we have your date of payment. Date of declaration, date of record, and date of payment. So what are these dates? These are the three important dates as to the declaration of dividend. So date of declaration, that is the date where the dividend is declared. So here, the dividend is declared. Date of record, the dividend now attaches to any person who is of record as of that date. Okay. So now, the dividend attaches to any person as of that record. So the reckoning point on who actually owns the dividend is date of record. So dito malalaman who actually owns or receives the dividend. Date of payment, actual payment of dividend. So for example, date of declaration natin is October 1. Date of record natin, October 20. Date of payment natin, October 27. Okay. So, here, let's say, ito yung mga dates natin. 10-1, 10-20, 10-27. 10-1 is your date of declaration. 10-20 is the date of record, and then 27 is the date of payment. Date of payment. Now, let's say A owns the securities. A owns the securities. So as of the date of declaration, para kanino dapat yan? Kay A. Kay A. Ngayon, binenta ni A yung security on 10-12. On 10-12, binenta niya kay B. So A sold to B. On the date of record, who actually owns or receives the dividend? The one who will receive the dividend is now B, hindi na si A. Okay? Si A dapat yung may dividend. Tama? Kasi date of declaration yan. Pero date of record is an important date which tells you who actually receives the dividend. Now, on the date of record, who actually owns the dividend or receives the dividend? It is B. Therefore, here, at the time of purchase, etong 10-12 na yan, ang tawag natin dyan ay dividend on. Bakit dividend on? Kasi hindi mo lang pinurchase yung security, you did not only purchase for the equity investment, but you also purchase your dividend. Okay? So you purchase two items, the equity investment and the dividend. So that is a dividend on. A purchase of investment with dividend in between date of declaration and date of record. So dito lang yan. How about date of record to date of payment? Do we account for that? No, we do not account for that. That is already an ex-dividend. Okay? So, here, yung in-between interest dates ng debt investment, ang tawag natin sa equity investment ay dividend on. So, if you purchase it in between date of declaration and date of record, you purchase a dividend also. So, how do we record that? To record it, so the total cash or the purchase price should be allocated both on your dividend and to your equity investment. So to record it, you debit equity investment, let's say at FVTPL, and then you have your dividend receivable, and then you credit cash. Okay? So dividend on. Dividend on happens if ever you purchase an investment and there is a dividend which is in between date of declaration and date of record. Okay, so here, for example, it is a problem. Purchase an investment on October 12 worth 500,000, representing 10,000 shares. Okay. So isulat natin. On October 12, purchase an equity investment for 500,000 representing 10,000 shares. On October 1, the shares has a declared dividend of 0.5 per share and was only recorded 10/20. Okay. So on October 12, purchased an equity investment for 500,000 representing 10,000 shares. On October 1, the shares has a declared dividend of 0.5 per share and was only recorded on October 20. Okay. So in between siya, di ba? Kung 10/1 yung ating date of declaration, 10/20 yung date of record. So ang date of purchase natin is in between 10/12. We call this one a dividend on. So how do we treat that? Out of the 500,000 purchase price, we get for the amount of your dividend and the amount of your equity investment. So for your dividend, how much is the dividend? It is 0.5 per share. So 10,000 multiplied by 0.5, we have here 5,000. And the remainder of 495,000 is for your equity investment. How do we record this one? So we debit equity investment at FVTPL, and then we have your dividend receivable, and then we credit cash. So this will be 495,000, 5,000 for dividend receivable, and 500,000 for cash. Okay? So ingat lang sa dates ang tignan natin if ever it is in between date of declaration and date of record. That is for your initial measurement. Now, on your subsequent measurement, we subsequently measure the shares are subsequently measured at fair value. So for example, so we have purchased here 10,000 shares, right, on 10/12. So 10/12, we purchase 10,000 shares. What is the value provided? 495. 495 kasi nga yung 5,000 nilagay natin sa dividend receivable. So this is 495,000. Okay. Now, in providing the amount of your subsequent measurement, that can be per share or the amount itself. So let's say on 12/31 year 1, 12/31 year 1, the share is trading 48 per share. 12/31 year 2, the share is trading 50 per share. Okay. So how do we subsequently measure it? So we have here 10/12, and then we have here 12/31 year 1, and then 12/31 year 2. So you know that the subsequent measurement is the fair value. What is the fair value on 12/31 year 1? 48 per share. How many shares do we have? 10,000. So this is 480,000. 12/31 year 2. How many shares do we have? 10,000. What is the fair value per share? 50. 50 times 10,000 will give us 500,000. What is the value on 10/12? 495,000. So this one is greater, this one is lesser. Okay. So what we do here is the value now is 480. Previously, it is 495. Gain or loss? Before, it is 495. The value now is 480. Gain or loss? We have a loss here of 15,000 because the fair value decreased. The fair value decreased here. On 12/31 year 2, from 480 to 500, increase or decrease? Fair value increase. By what amount? 20,000. So this is gain. If that is FVTPL, when and how do we present it? We present it at the date of subsequent measurement, that is 12/31 year 1. How do we present it? As an item of profit or loss. How about FVTOCI? When and how do we present it? We present it at the time of subsequent measurement. And how do we present it? As an item of OCI. So we place it as an item of OCI. Take note For an item of OCI, we can get for the amount of gain or loss for the period and the cumulative gain or loss. So, if ever that is gain or loss for the period, meron tayong year 1, year 2. What is the gain or loss for the period year 1? You have 15,000 loss. Year 2, how much is our gain or loss for the period? 20,000 gain. Now, cumulative. So, from 10, 12 to year 1, what is the cumulative? 15,000. If you have negative 15,000 plus 20,000, we have a cumulative gain of 5,000. Ganyan naman pagka-cumulative. Pag cumulative kasi, kukunin nyo yung value as of subsequent measurement versus the beginning carrying amount or the initial carrying amount. So what is the subsequent measurement on 1231 year 2? On 1231 year 2, our subsequent measurement is 500,000. What is the initial carrying amount? It is 495. So 500 versus 495, we have a gain of 5,000. Kaya nakuha yung cumulative gain na yan. Or ang net ng negative 15 at 20 ay 5,000. Ganun siya. So take note pagka ang tinanong how much is the gain or loss for the period, FVT OCI, ito yung mga sagot nyo. Pag cumulative, get for the cumulative. You just need to add or deduct the total amount of gains or losses to get for your cumulative gain or loss. Okay? So we have already discussed that also in your debt investments. Now, we're done with your initial, we're done with your subsequent measurement. Now, how do we present it? How do we present it? So, presentation. So, this applies whether it is an equity investment or a debt investment. VTPL is always presented as a current asset because it is for trading. How about FVTOCI? It depends on when can you realize it. So normally, this can be current or non-current. How about amortized cost? For amortized costs, it will take a long time of period. It is initially non-current. It will become current if it is due within 1 year. It is due within 1 year, meaning you can collect it within 1 year. So how do we present? Whether equity or debt investment, FVTPL is a current asset always because it is held for trading. FVTOCI, since you are to collect here and it is only for sale, not held for trading, it can either be current or non-current depending on when you will realize it. Next, for your amortized cost, it is non-current per se because normally investments in debt take a long time for you to collect the contractual cash flows. Therefore, it is non-current. In the exemption, if ever it is already due within 1 year, then you can measure it as a current asset. Okay? So presentation, FVTPL, FVTOCI, or amortized cost. Now, how about your derecognition? How do we derecognize? What do we mean by derecognize? When we say derecognize, we remove in the books the asset. So, tatanggalin na natin sa libro natin yung ating mga investment. So, we remove FVTPL, FVTOCI, and amortized cost. So, when do we recognize? There are two instances provided under PFRS 9 regarding your derecognition. So, the first instance is if the contractual cash flow collection expired. If the collection of contractual cash flows expires or expired, meaning kung 5 years yan, at the end of 5 years, kailangan mo nang i-recognize yan kasi nga, wala ka naman na makokollect dyan. Okay? When the contractual cash flow expires. Now, another derecognition is whenever you transfer the financial asset or the investment. You transfer the financial asset or investment. What is this transfer? Normally, it is through sale or you sold the asset. Through sale or you sold the asset. So for your sale, the main problem here is the computation of your gain or loss on sale. So on your gain or loss on sale, how do we compute it? First, we compute for your selling price. Less the carrying amount of your investment. Less the carrying amount of your investment. Yan lang naman siya. This is your gain or loss. If your selling price is greater than your carrying amount, we have a gain. If your selling price is lesser than your carrying amount, you have a loss. Okay? Now, take note of the gain or loss on sale because the gain or loss on sale under FVTPL and amortized cost, it is presented as an item of profit or loss. But under your FVTOCI, the item of gain or loss is presented as an item of your retained earnings. Okay? Again, FVTPL amortized cost in case you sold the asset. The gain or loss on sale, FVTPL amortized cost is presented in profit or loss. FVTOCI, it is presented as an item of retained earnings. So mag-ingat kayo dito. How much is the gain or loss presented in profit or loss? Tapos FVTPOCI pala siya, zero ang sagot dyan. Pero pag tanong lang, how much is the gain or loss, you can answer it. Okay? You can answer it. Kasi it can apply both for your FVTPL and amortized cost. Pero kung ang tanong, how much is the gain or loss in FVTOCI? Your answer is zero. Kasi ilalagay yan sa RE. Gain or loss in profit or loss. This is only applicable for FVTPL or amortized cost. If that is FVTOCI, your answer is zero because the gain or loss for FVTOCI is presented in your retained earnings. Further guys, further, any cumulative gains or losses in FVTOCI is transferred to retained earnings. Any cumulative gains or losses is transferred to retained earnings. So let's have an example. So dito tayo, balikan natin to. So this one. Let's just copy this. No. So ito yung example natin kanina, di ba? So we have here 1231 year 1, 1231 year 2. So let's say on March 1, year 3, you sold all the shares, for 515,000 pesos. You sold all the shares for 515,000 pesos. Okay. So what is the selling price? Our selling price is 515. What is the carrying amount? So kung year 3 yan, ito yung carrying amount niya as of December 31, year 2, 500,000. So I have here 15,000 gain. So how do we account for the gain? If that is under a VTPL, guys, you account for the gain as an item of gain on sale in profit or loss. So i-record natin yan as in debit to cash. We receive 515,000. Tanggalin mo yung FVTPL na 500,000. Tapos meron tayong gain on sale na 15,000. Kung FVTOCI yan, ang gagawin mo naman, debit cash for the amount received, remove FVTOCI for 500,000, and then retained earnings papasok yung 15,000. Okay, diba? Tapos, ano pang entry natin sa FVTOCI? We need to transfer the cumulative gains or loss. So, what is our cumulative gain or loss? 20,000 versus 15,000. We have 5,000 gain cumulative. We need to transfer it to retained earnings. So our entry is we remove the cumulative unrealized gain. So you remove the cumulative unrealized gain of 5,000. You transfer it to retained earnings, 5,000. Sir, how about we remove the unrealized loss? If that is unrealized loss, you debit retained earnings, unrealized loss, cumulative unrealized loss. In case that is a cumulative unrealized loss. Okay? So again, we go back. For your derecognition, when do we derecognize? we have only two instances. If the contractual cash flow expires or there is a transfer of the financial asset or the investment through sale. If that is through sale, there is a gain or loss on sale. So how do we compute for your gain or loss on sale? The selling price less the carrying amount, gain or loss. If the selling price is greater than carrying amount, gain. Selling price is lesser than carrying amount, loss. Next question, how do we present your gain or loss? To present your gain or loss, it depends whether the investment is FVTPL or amortized cost or FVTOCI. If that is FVTPL or amortized cost, you present it in your profit or loss. If that is FVTOCI, you present it as an item of retained earnings. Plus, any cumulative gains or losses in FVTOCI is transferred to retained earnings. That's why in our example here, we record the gain or loss in your FVTOCI as an item of retained earnings, and then the cumulative gain of 5,000 is transferred also to retained earnings. So cumulative unrealized gain of 5,000 is transferred to retained earnings. Ingat kayo dyan. Sir, question. Is there a possibility that we have sold the investment also in between interest date or a dividend on? Yes. If in case, pagka ganyan, you need to adjust the selling price. Di ba katulad din kanina, yung purchase price natin, ibawas mo yung interest income or ibawas mo yung dividend on, yun yung purchase price lang ng investment. Sa selling price naman, in case na nabenta mo siya in between interest dates, o kaya at i-dividend on, tanggalin mo rin yung interest, tanggalin mo rin yung dividend. Para yan lang yung selling price of the investment. Okay? So, sa selling price din pala, applicable yung in-between interest dates at saka yung dividend on. Basta alam niyo na yung concept nitong dalawang to, kailangan tanggalin lagi yan sa purchase price or tanggalin siya sa selling price. Okay? But take note guys ha, kailangan kasi nakalagay talaga dyan na total selling price, ganun siya. Pero pag sinabi selling price excluding the accrued interest, wag nyo nang exclude ulit. Okay? Alam nyo naman na yan, syempre, kayo pa ba? Gets na gets nyo na yan. Okay. Last topic for our investments under PFRS 9, we have your reclassification. So what is a reclassification? So a reclassification is the change of classification of our investment. Change of classification of the investment. So what do we mean by change of classification? Diba we have three classifications, FVTPL, FVTOCI, or amortized cost. Meaning, from FVTPL, it can be under FVTOCI to amortized cost. So from this to this. Kung FVTOCI yan, pwedeng from FVTOCI to FVTPL or amortized cost. Kung amortized cost yan, pwedeng FVTPL or FVTOCI. Okay, so for reclassification of investments, this is again due to the change of classification of the investment. And this change of classification is brought by the change in business model. It is brought by the change in business model. Take note for reclassification, it is only applicable to debt investments. It is only applicable to debt investment. It is not applicable to equity investments. Sir, why is it not applicable to equity investments? Ito kasi parehong fair value. So FVTPL, FVTOCI. So parang hindi mo pwedeng ilipat lang din siya sa FVTOCI kasi walang magbabago. Walang magbabago. Sir, bakit sa debt investment pwede ang FVTOCI to FVTPL? Kasi guys, dito, yung FVTOCI may collection. May collection. Dito kasi wala. Kaya walang effect kung i-reclassify mo siya. Magbabago lang yung presentation. Pero as to the net effect, wala. Wala. Kaya change of classification is only applicable to debt investments. It is not applicable to equity investments. Now, for your change in classification, what do we need to know? For your change in classification, we need to learn, of course, the reclassification date. So what is this reclassification date? Reclassification date is the first day of the next accounting period following the reclassification. Following the reclassification. So reclassification date is the first day of the next accounting period following the reclassification. So for example, you are using an annual period. You are using an annual period, and let's say this is a calendar period. Let's say it is a calendar period. So you reclassified on August 31. You reclassified on August 31. Question: what is the reclassification date? The reclassification date is the first day of the next accounting period following the reclassification. If you reclassified on August 31, 20, what is the next accounting period? Your next accounting period is 2021 kasi nga calendar yan. So, ang first etong accounting period na yan is January 1, 2020 to 12/31, 2020. So, your next accounting period is January 1, 2021 to December 31, 2021. So, ano yung reclassification date? It is the first day of the next accounting period. So, when is your next accounting period? 2021. What is the first day? January 1, 2021. Because we are using calendar. We are using calendar. So following the reclassification. So first day of the next accounting period following the reclassification. So what is the effect of this reclassification? What is the effect of these reclassifications? So at the date of reclassification, you need to measure it at your fair value. You need to measure it at your fair value. Actually, we don't have any problem on your change as to your reclassification from FVTPL to FVTOCI because they are already stated at fair value. So there is no gain or loss on reclassification from FVTPL to FVTOCI or FVTOCI to FVTPL. Why, guys? Because they are already at fair value. So for example, so we have 20,000 shares. We have 20,000, no, debt investment data. So we have here a debt investment with carrying amount of 3.5 million on August 31, 2020. On the same date, the investment was reclassified from FVTPL to FVTOCI. On December 31, 2020, the fair value of the investment is 4 million. Okay. So 8/31/2020. Okay. This is the date wherein it is signified that there is a change of business model from FVTPL to FVTOCI. 8/31/2020, this is ignored. This is ignored. What is the date of the classification? First day of the next accounting period. So January 1, 2021. So this is the reclassification date. We need to compute here the gain or loss on reclassification. But before that, on 12/31/20, we need to account for the changes in fair value, right? So what is the carrying amount? 3.5. What is the fair value on December 31, 2020? So on December 31, 2020, the fair value is 4 million. So 4 million less 3.5 million, we have a gain. So we debit FVTPL 500,000. We credit gain, unrealized gain of we credit unrealized gain of 500,000. Okay? Because we need to account for the change in fair value. It will only be formally reclassified on January 1, 2021. How do we account for this? You account it at fair value. But what is the fair value on January 1? the fair value is the same as the ending fair value. So kung ano yung fair value ng 12/31, siya rin yung fair value ng January 1. Kaya wala kang difference na makikita. So ang gagawin mo, you need just to reclassify it from FVTPL to FVTOCI. So we need to remove the FVTPL. How much is the carrying amount of FVTPL? 4 million. Tapos, ilagay mo na siya sa FVTOCI, 4 million. Yan yung sinasabi ko kanina na there is no gain or loss on reclassification from FVTPL to FVTOCI or FVTOCI to FVTPL. Saka lang, pagka-amortized cost, FVTPL, FVTOCI. So, to or fro. Okay, to or fro. So, from AC to FVTPL or FVTPL to AC, from FVTOCI to AC. Okay, yun lang yung mga problema natin. Actually, it's more of AC to FVTPL and FVTOCI. Kasi yung AC, meron tayong ditong amortized cost using effective interest method. Okay? So, iba't iba talaga yung value niyan sa fair value. So, yung difference nito, this is the amount of your gain or loss on reclassification. Happens only on your AC to FVTPL, FVTOCI. Okay? So, that's it. That's the end of our session. We finished now your whole PFRS 9 purely. We discussed your FVTPL, FVTOCI, and your amortized costs for debt investments and equity investments. And then how do we present them? How do we subsequently measure them? How do we account for your in-between interest rates and dividend on? And also, how do we account for your derecognition and your reclassification of your debt and equity investment? So take note, guys, there is only gain or loss. You compute it depending if ever there is a transfer, that is your derecognition, and there is a reclassification. Mag-ingat kayo sa reclassification because minsan, madalas, yung mga estudyante ko talaga, nagkakamali sila sa reclassification kasi nakakalimutan nila yung reclassification date. Take note, it is the first day of the next accounting period. So you do not reclassify it at the date of the, or at the time there is a signified intention to change business model, but it will be the day next of the next accounting period, first day of the next accounting period. Okay?